Hello and welcome to S2P Market Commentary for the market week ending Friday, December 21st, 2012. And since we made it through Friday, December 21st, here we are looking forward to another market week. So the market breadth summary: with this past week's market decline, our bull-bear point and figure ratio rose from 1.25 to 1.45, moving further inside bullish territory. The total count of securities in bullish or bearish patterns rose 8% to 2,072. The count of bearish stocks decreased 1%, while the count of stocks in bullish patterns increased 15%. The S2P Pearls P&F Market Breadth Summary chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the data from which the image is generated. And you may become a paid subscriber to S2P Market Signal by visiting S2PMarketSignal.com. Market breadth. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 172 points for the 5th rise in 13 weeks. At a positive 88 points, it has just risen above the July 2012 top and the July 2011 top, while it remains above the February 2010 bottom, the March 2011 bottom, the August 2011 bottom, the June 2011 bottom, the December 2011 bottom, and the June 2012 bottom, but below the November 2010 bottom, the November 2011 top, the January 2011 top, the February 2011 top, and the September 2011 top. Volume analysis. This week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 4 accumulation days and 1 distribution day. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended the week in neither accumulation nor distribution mode. Momentum. The CCI 20 daily began a Woody's uptrend 3 weeks ago. At Monday 12/17 close, we got a Woody's zero-line reject long entry signal for Tuesday 12/18 open. At Friday 12/21 close, the CCI 20 dropped below zero, so we exit the trade at next Monday's open. We will report the result of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 3 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 began a Woody's downtrend 3 weeks ago. It is now at minus 17.73, up slightly from last week, yet remaining within the range for the possibility of a zero-line reject short entry signal this coming week should the market decline significantly. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish networkers continues in the top 5. Disk drives and brokers have entered the top 5. Computer tech has left the bottom 5. Gold and silver remains in and now leads the bottom 5. Oil services remains in the bottom 5. Bearish, S&P retail remains in the bottom 5. Computer hardware has left the top 5. Focus this week: how 10,000 contracts crashed the market, a visual deconstruction of last night's E-mini flash crash from www.zerohedge.com. The market is more fragile than most of us had thought, and someone appears to be testing how it might be possible to wreak a lot of havoc for relative peanuts. As this chart shows, there was a rather serious event, and you can read all about it at zerohedge.com. Thank you for listening to and watching this week's market commentary, respectfully submitted by Donald L. Pearl, Jr. Have a Merry Christmas this week.